Do you feel as though some of these inflation hedge stocks are still the place you want to be?
Well, I think that the key, Don, is really kind of diversifying your portfolio, right? And so when you kind of think back to like 2020 and 2021, everybody was in those high growth names. And so things got really real going into 2022, and they've stayed that way. And so, we've been thinking about stocks all this year. First it was like, okay, there's some names down. Let's buy the names that we like and look for some good opportunities. And so then we kind of moved into let's really think about what we can, how we need to be positioning portfolios. And so for us at Pivotal, it's about income and it's about really kind of diversifying your portfolio. And we're long-term investors. And so, we're looking at names like, we've got a big tech week next week. Amazon's reporting. Alphabet is reporting, and really looking at what do we do with those names that most people own, but in a time like this where things are still volatile, what are we going to do with those names?
So what are you going to do? We're looking at a board right now that's showing big earnings reports coming up next week, including Amazon and Apple. Speaking of the technology trade over there, they're coming up on Thursday. Intel's there as well. I mean, this is one of those situations where Microsoft, Alphabet, the biggest names in the market are all reporting earnings next week. So what do you buy?
Yeah. So I think, first of all, thinking about big tech from a position of, what do you have the most conviction around? And, as you mentioned, Google's reporting next week, Alphabet, and also Amazon. And so looking at these things, first of all, when we're looking at, when I'm listening to the earnings call next week, I'll be looking for, in terms of Google, I'll be looking for like total revenue, growth, probably between like 14 and 15%, and consensus on the street is about like 16%. I'm looking for search to be up, of course, right? But around 12 to 13% is right in line with what we're looking for. And also thinking about, what their margins are looking like. They've hired they've hired several thousand employees last quarter, so we're going to be looking to see if that puts pressure on their margins. Amazon, I think a lot of people are thinking about, they're kind of waiting to see if there's like a better entry point for Amazon. I'm kind of want to transport people back to 2020 when Amazon stock was so expensive and everybody was talking about how overvalued it was. And yes, since then we've had a stock split, but Amazon's about 31% on sale right now. And so I really can't picture a world in which we don't have Amazon, fingers crossed. And so, I'm really going to be looking at any kind of developments, any kind of challenges they might be having. Definitely revenue. I'm looking about revenue up about 118 to 119 billion. But, I really think that that's an opportunity here. You have to think about whether you want to own these names long term. And I'm a long-term investor. Our clients are foundations and endowments. We're holding these stocks for a long time. So it's an opportunity, if you like them, to buy more because I think that they're still on sale, but then also to hold.
All right. So we've just got a few moments left here. What's your least favorite part of the market right now?
Oh gosh, like you hit me with like the craziest thing. Actually, I don't have a least favorite part of the market. If I had to say anything, I would say bonds because they're really not doing what I need them to do. In a portfolio, I need certain things to zig while others zag, and bonds have not been delivering.